Welcome to the Be Smart podcast, how not to be an idiot with your money. Before we get into market headlines, Jared, you are going to Vegas for a DJ gig in May. It's at the MGM, correct?
Yeah, so the MGM Grand used to have a pool party called Wet Republic. It's a big giant pool with this huge sound system, and there's like a couple thousand people there. They got cabanas instead of table service. Like it's huge. It's huge. They have like Tiesto and Steve Aoki and Avicii before he. I mean, it was like it's insane. Like they get the biggest DJs around, and I'm gonna open on May 30th in Vegas. I'm going to play from 11 a.m. to 1 p.m.
That's a big deal. That's really cool. Congratulations.
Yeah, thanks. So it's like 96% set in stone. Like I'm still waiting to have a phone call with the organizer. But I'm pretty sure it's going to happen.
Man, I would love to get out there for that, especially since we'll have some NBA playoffs going on around then. Getting the sports book, sounds amazing.
You heard me play in Miami, right? And the music I played in Miami is not going to be the music I play in Vegas. Like I have to significantly take up the energy level in Vegas, which is really hard for me to do. Like I like playing the down tempo stuff. That's kind of my groove. I do have some higher energy music, but it's a little bit of a struggle. I'm going to try to make it work.
Let's get into these market headlines, starting with reciprocal tariffs. President Donald Trump said he plans to start his reciprocal tariff push with all countries on April 2nd, curbing speculation that he could limit the initial scope of the levies. He said he couldn't care less if car makers raise prices in response. Naturally, this has a lot of investors on edge. Do you anticipate Trump's so-called Liberation Day to deliver the next, let's call it, roundhouse kick to the face for markets?
Yeah, I mean, April 2nd is Wednesday. I'm just glad it's happening after the month and the quarter. Let's put it that way. I don't really know what's going to happen on Wednesday. I have a sense that stocks are going to be down a lot, but then again, I think everybody thinks the same thing, which is consensus. So maybe the market actually rallies. So I'm just going to try to mind my own business and stay out of the way. But, I thought Trump was kind of pivoting on tariffs, because he made that comment last week about how some countries were going to be exempt and some things were going to be exempt. And I thought he was pivoting to try to kind of put a floor on the market. It doesn't really seem that way. The S&P today was down at one point, today being Monday, the S&P was down about 1.5% at one point. It's crawled all the way back. It's down maybe 20 basis points at this point. So, I've been saying in the newsletter, I've been saying in the Daily Dirt app that, I didn't think that the pain was over. Like I still thought we had some downside. And we do.
Let's talk GME's Bitcoin bet. GameStop's board unanimously approved plans to buy Bitcoin using a mix of corporate cash and proceeds from future debt or equity issuances. To help fund the move, it's raising $1.3 billion through a convertible bond offering. Shares dropped as much as 25% the day after the announcement. Your thoughts on this massively leveraged bet? And could you explain to me, like I'm five, what a convertible bond is?
They're basically trying to do the same thing as MicroStrategy, and it worked for MicroStrategy, but I don't think it's going to work for GameStop. So first of all, just for starters, a convertible bond is a bond that turns into stock if the stock goes above a certain price. So basically, options because you've been working on the options masterclass. It's a bond with a call option attached, right? So convertible bonds are super funky securities. I like them. I think they're really cool. But not only do you have duration because of interest rates, you have to think about duration, but you also have to think about this call option and the volatility of the option. So there's like a million ways to lose money on this, but this is what MicroStrategy has been doing. MicroStrategy has been issuing converts to buy Bitcoin, and GameStop is like, oh, we'll try it too. And it's, It's not going to work out.
It seems reckless to me.
Yeah.
Let's talk a little about the dollar here. Just 2 months into Trump's second term, his escalating tariffs and bid to roll back decades of globalization is shaking confidence in the dollar. The dollar has dropped against all but a handful of the 31 major currencies over the last 3 months, sending Bloomberg's dollar index down almost 3%, its worst start to a year since 2017. What's your take on this idea that the dollar, in an environment where it should be acting like a safe haven, isn't?
You know, in the Daily Dirt app, I've been crapping all over the dollar for like the last 3 or 4 months. I thought the tariffs would be negative for the dollar. I thought Trump's election would be negative for the dollar. And it wasn't for the first couple of months, and now that's turning out to be the case. By the way, there's $2 indices. There's the DXY, which is the dollar index, and then there's the BBDXY, which is the Bloomberg dollar index. The dollar index is the first one. The dollar index is really a terrible index of currencies because it's so heavily weighted towards the euro. It's like 55% euro and like 25% yen. And Canada, Australia, New Zealand, all the other G10 currencies are really small. The BBDXY is a better index because it's more equally weighted, right? And so if you're really an FX person, you don't look at the DXY, you look at the BBDXY. But the DXY has futures on it and has all kinds of derivatives on it, and that's generally what people use to hedge. I kind of wish there was some kind of derivative on the BBDXY, but there isn't.
In terms of safe haven, I mean, gold is still ripping here. It's up over 1%. How do you think it's going to react to this so-called Liberation Day that's going down on Wednesday?
First of all, this just kind of occurred to me. Liberation Day, April 2nd, it's on the calendar. Everybody knows when it is. It's kind of like payrolls. It's kind of like any other economic piece of data. It's like anything else. I call it scheduled volatility, right? It's like an earnings report. On this day, we know there's going to be volatility, right? As opposed to unscheduled volatility, which is the pandemic, right? Like COVID-19, like that was unscheduled volatility, which is a true surprise. So April 2nd isn't really a surprise. So therefore, the chance that the stock market's going to be down 4% on April 2nd, I don't think it's going to happen. It's scheduled volatility. Everybody knows about it, right? You asked about gold. Gold, I think, is starting to go parabolic. You know, like it's really, it's like the Soros reflexivity thing. It's like really picking up speed. I'm still bullish. You can't not be bullish. This is a powerful trend.
So you still hate gold?
I still hate gold, yeah.
I'm with you on this Wednesday tariff thing. I have this gut feeling that stocks are actually going to go up.
Yeah.
For our main topic, let's talk labor market pessimism. Last Friday's report from the University of Michigan showed a particular worry from consumers, with 2/3 expecting unemployment to rise in the year ahead, the highest reading since 2009. Your thoughts on the labor market right now and where it's heading?
I would be part of that consensus. I think the unemployment is going to rise too, unemployment rate. First of all, I did some math on this. Actually, I didn't do the math. I asked AI, right? I asked Perplexity. But I went to Perplexity and I said, let's just say hypothetically, the federal government laid off every single worker, 2.4 million workers. What would that do to the unemployment rate? And Perplexity said the unemployment rate would go from 4% to 6%, right? So if every government worker got fired, the unemployment rate would only go to 6%. Now, there's a lot of knock-on effects, right? Because there's government contractors and, private businesses that depend on the government. So the real number would probably be closer to like 8 or something like that. But the point of this exercise is really to show that it takes a lot of job losses to really move the needle on the unemployment rate, like millions, which means you really have to have a hard recession to get the unemployment rate even up 1%, right? Now, one thing that I think could get the unemployment rate up actually is private equity, right? Like private equity, if the economy starts to go south, private equity is going to lay off people so fast, incredibly fast. So I think you'll see the labor market weaken much faster than in an ordinary recession. We could go from 4.1 to 5.1 within a couple of months. I think that's possible.
I'm glad you brought up AI because I want to talk about this concerning development with AI shutting Gen Z out of the labor market. For example, the unemployment rate for 20 to 24-year-olds hit 8.3% in February, more than double the jobless rate for workers between the ages of 25 and 54. Entry-level jobs that once served as stepping stones are vanishing. And lastly, over 1/3 of U.S. managers say they'd prefer AI to Gen Z hires. That's pretty dark, no? So, I mean, what would you say to younger generations struggling to land jobs? How can they improve their odds of getting hired in the age of AI? I mean, clearly a lot of these entry-level jobs are dying or on the way out if they're not already gone. So what would you say to these younger people looking to get jobs?
I don't really have a canned response to this, but after I finish this podcast, I'm going to school and teach my class, right? Which is a personal finance class. And the second class in the semester, we actually talk about getting a job. And I have them do resumes, which, they're freshmen. For a lot of these kids, it's the first time they've ever done a resume, and it's funny because like the way I sort of construct the class is it's really sink or swim, like, for example, if you want to play on your phone during class, I won't say anything. There's a lot of professors who will freak out if somebody's on their phone during class. I don't care. Like basically what I say is look, we're talking about important stuff here. If you miss it because you're not paying attention, it's going to be on in the exam. You're going to get it wrong. It's not on me. It's on you. Therefore, all the kids pay attention. Like once I make that clear, then they pay attention, right? But if I were like this school marm, like, yelling at these kids to put their phone away, like it would have the opposite effect. So basically, I treat it as if they are kind of competing for jobs in the private sector. You know what I mean? I also give out awards and prizes for high grades on stuff, and the whole class claps and stuff like that. Like it's really, I want to recognize people for doing good things.
What kind of prizes you giving out?
Books.
Ooh, nice.
Yeah, so I actually have a financial planning paper where they basically have to plan out the next 10 or 20 years of their life, like, buying a house, getting a job, stuff like that. And the paper with the highest grade, I give them a copy of those bastards.
In the week ahead, nothing in the mailbag this week aside from some pretty positive feedback on the options masterclass from those who got early access to the first module. Otherwise, our boy Video Smurf did not clap back on our tariffs question we presented him.
That's okay. The options masterclass, I'm going to send an email around or something, but I got to tell you, like, I wrote the class, which took me about a month, like basically working at nights on the couch, like typing on the laptop. And it was one of the most unpleasant things I've ever done because there's a lot of detail. There's a lot of stuff in there. It was hard. It was hard to write the class. So after I was done, I was like, yay, I'm a hero. I wrote this class. Now let's put it out there. There has been so much work in production and creating charts and graphs and animations. Like I have actually, just by writing it, like my name is on it, but I have played such a small role in this. Like basically I'm just a content creator. There have been a dozen people who have put hours and hours and hours into this thing. So I just want to recognize you and everybody else who has worked on this because it's been a team effort and I just played a small part and I can't wait to get it out there.
I mean, me too. I'm super proud of it. I was going to ask you your elevator pitch for it, but that right there is perfect. Sold. What else we got going on this week? We've got Friday's U.S. payrolls report for March, and then Jay Powell's speaking after that on Friday. You looking forward to old Jay's remarks?
I don't anticipate we're going to get a lot that's very interesting out of that.
Well, that wraps it up for this week. Everyone like and subscribe to the channel if you're a fan of the podcast. Until next week, Jared, later, and go Gators.
Go Gators.